Picture this. It is April 2024, right after the Bitcoin halving. Your Telegram is exploding, TikTok is full of green candles, and every friend who swore off crypto in the last crash is suddenly back. One of them, let's call him Minh, sends you a screenshot. His tiny meme coin account is up 20x in a week. He writes, "Bro, this is the start of the bull run. All in or stay poor." Fast forward. It is late 2025. Bitcoin has already printed new all-time highs and then dropped more than 30% from the peak. Altcoins are bleeding every week. Minh's account, the same one that once made him feel invincible, is now down over 80%. The coins he refused to sell because they will come back barely move. The only thing that keeps moving is his anxiety. Maybe you did not go all in on a meme coin, but you bought the top of a hype narrative, or you kept adding to losing positions because everyone on Twitter said, just be patient. On paper, crypto is the land of X10 and X50. In reality, most new money quietly becomes exit liquidity for someone else. This video has one job: to help you prepare for the 2025 crypto bull run so you do not buy the top again. We will talk about why most retail traders still lose money, what has changed in this cycle after the 2024 halving and the ETF wave, and what you can actually control: your risk, your behavior, and your plan. If you have ever looked at your portfolio and thought, how did I mess this up so badly? Stay with me. We are going to slow everything down and build a way to face the next bull run without repeating the same painful mistakes. Minh's story really begins in his living room in November 2021. His online store has just finished a record month. He is tired but proud, staff paid, bills covered, a bit of cash left. That night, instead of watching a movie, he opens YouTube. The algorithm serves him a video titled, "Last Chance to Get Rich in This Crypto Bull Run." The thumbnail shows a guy screaming next to a rocket and a 100x sign. He clicks. Then he clicks the next video. And the next. Within a few days, Minh has heard the same message on repeat. If you had just bought Bitcoin 10 years ago, if you just held these 3 altcoins until 2030, if you kept buying every dip, you would be free. Influencers show profit screenshots and luxury trips. Nobody talks about taxes, risk, or losing money. It is always opportunity, generational wealth. Don't be the one who missed it again. So he opens an account on a big exchange, wires in more money than he would ever put into a single stock, and buys a basket of coins he barely understands. At first it works. One coin doubles, another goes up 50%. The green numbers on the app feel better than any salary raise he has ever received. When his wife asks, "Is this safe?" he answers after a few evenings of watching crypto YouTube, "Relax, I'm investing long term." Then the music changes. The chart that used to only go up starts to stall. Red candles appear more often. News headlines shift from new highs to correction to crash. A big stablecoin ecosystem implodes. A major exchange goes under. Suddenly, phrases like counterparty risk and not your keys, not your coins are no longer memes. They are the reason people cannot log into their accounts. Minh feels the pain directly. A lending platform he used to earn extra yield freezes withdrawals. He had chased a few percent of interest and now cannot move his coins at all. The market keeps sliding. Each time he thinks it cannot go lower, it proves him wrong. By 2023, he is exhausted. He sells most of what is left near the bottom, deletes the apps, and mutes the group chats. To his friends he says, crypto is a scam. Privately, he is angry at himself for jumping into something he never really studied. But markets move on even when our memories stay stuck. On April 19th, 2024, Bitcoin goes through another halving. Mining rewards are cut in half again, supply growth slows, and attention rushes back to the space. New spot ETFs launch. Financial media that mocked crypto in 2022 now runs segments about digital assets as an emerging asset class. Prices climb off the lows. By early 2025, Bitcoin has printed fresh all-time highs before pulling back sharply. And talk of the next big bull run is everywhere. At first, Minh watches from the sidelines. Every new high feels like a joke at his expense. He keeps telling himself, I am not going to fall for this again. But the more he tries to ignore it, the more the market fills his feeds. Friends who quietly held through the bear are suddenly up big. Screenshots of six-figure portfolios start appearing in group chats again. The old feeling returns. Maybe this is his last shot to fix the past. This time he decides he will not just buy and hold. He will trade. He opens a futures account, watches leverage tutorials, and tells himself he will be disciplined. Risk 1%, aim for 3, follow the plan. The first few weeks are kind. He catches along on Bitcoin after a strong ETF inflow day. He rides an AI narrative coin for a quick 40% move with modest leverage. He snipes a meme token pump the night a celebrity mentions it on stream. The account grows faster in a month than his business has grown all year. Then volatility hits. Bitcoin fails to hold the highs. News about regulation, macro fears, and over-leveraged positions start circling. Prices begin to swing violently in both directions. Minh finds himself long on 3 altcoins at once, all with too much size, all slightly underwater. Cutting them will lock in losses. Holding them means believing the bounce is coming. The more the candles dip, the more he stares at the screen, hoping for a miracle reversal. One ugly wick later, 2 of his positions are liquidated within minutes. Most of the profit from weeks of disciplined trading vanishes in one move. He sits in the blue glow of the monitor and thinks, I knew better this time. How am I still here? From that point, he slides into a spiral almost every struggling trader knows. Revenge trades. Bigger size to make it back faster. Sleepless nights. Snapping at his kids because a sudden dip ruins his mood. Going quiet whenever his wife asks, how's that crypto thing going? Refreshing the P&L even when he has promised himself he will not open the app today. Maybe you have never touched futures. Maybe you only hold spot. Or you were just thinking about entering crypto for the first time before the 2025 bull run really takes off. Still, parts of Minh's story probably feel uncomfortably familiar. The FOMO when others win, the shame when you lose, the quiet fear that you are always arriving a little too late. That is the emotional starting point of this video. Not a clean slate, but a room full of people who have already been burned once and are still tempted to step into the fire again. Before we talk about preparing for the 2025 bull run, we have to understand why so many of us turned a market full of opportunity into a machine that prints regret. Now let us pull back from Minh's story and ask the harder question. Why is his experience so common? Why do so many people lose money in a market that keeps creating new millionaires? We are not talking about a few unlucky traders. Recent surveys suggest that around 84% of retail crypto traders lose money in their first year. In traditional day trading, one study found that only about 1% of day traders make more than minimum wage after a year. On top of that, billions are drained each year through hacks, rug pulls, and fake investment platforms. 2024 alone saw more than $3 billion in losses from crypto hacks and scams, and investment-style crypto scams now account for the majority of reported crypto fraud losses. So what is actually going wrong? First, there is our own psychology. FOMO. We do not buy because the setup makes sense. We buy because someone else already made money. By the time we see the screenshot, the narrative, and the chart, we are often late. Greed. We say, I will take profit at 2x, then watch it go to 2x and think, okay, maybe 3x. We forget that unrealized gains are not real until we actually sell. Loss aversion. We hate admitting we are wrong. Cutting a loss feels like failure, so we hold and hope, turning small cuts into open wounds. Overconfidence. A few early wins trick our brain into believing we have skill when it might have been pure luck. We increase size just when we should be most cautious. Second, there is the lack of a real system. Many people go into crypto without answering basic questions. Am I an investor or a trader? Am I playing a 3-year game or a 3-minute game? They put random percentages into random coins, with no maximum risk per position, no plan for what happens if they are wrong. There is no journal, no review, no record of why they entered, what they felt, or how the market actually behaved. They buy things they do not understand, tokens with opaque tokenomics, vague roadmaps, or no clear use case. When price moves, they have no anchor beyond other people's confidence. Third, there is the toxic market environment. A lot of content is built to grab attention, not to protect your capital. Screenshots of huge wins, TikTok tutorials on safe 100x leverage, Discord groups shilling the next gem. Algorithms reward extreme conviction and oversimplified messages. All in or stay poor. This coin will make you rich. Only idiots sell. Scam operations build fake investment platforms that look professional bombard social media with deepfake ads, and design funnels that drag people from small test amount to life savings frighteningly fast. And finally, there is how the crypto market itself is structured. It is 24/7, global, and highly leveraged. That means more noise, more fake breakouts, more violent liquidations. The presence of whales, funds, and sophisticated players means that someone in the market is using data, tools, and discipline that most retail traders simply do not have. Big events, like the 2024 Bitcoin halving, ETF approvals, or major hacks, amplify volatility and narrative swings. If you are unprepared, each event becomes a trigger for emotional decisions, not strategic ones. So when you combine human psychology not built for fast, volatile markets, no clear system, a content environment that glamorizes risk and hides losses, and a market that punishes hesitation and overconfidence equally, you get exactly what we see each cycle: a small group of prepared players who extract value, and a very large group of hopeful participants who provide liquidity, stories, and screenshots. This is not about shame. If you see yourself in Minh, you are not uniquely bad with money. You are a human being dropped into a casino that looks like a serious financial market. But here is the good news. While you will never control the market, you can control which role you choose to play in the next bull run. You can stay as background liquidity, or you can start acting like someone who expects to still be here after the hype is over. Most people, when they lose money in crypto, point the finger outward. They blame the market makers, the insiders, the whales, the KOLs, the government, the exchange. And to be fair, there is a lot of blame to go around. There are bad actors. There are traps. There are systems designed to separate you from your money as efficiently as possible. But here is the angle almost nobody wants to sit with. Every position you open is your responsibility. Every single one. The exchange did not click the buy button. The influencer did not set your leverage. The whale did not force you to hold a coin down 80% because you did not want to admit you were wrong. Crypto is not just a place to get rich fast. It is a mirror. It reflects your patience, your ego, your discipline, and your relationship with risk in a way few other markets do. Most people think, if I could just find the right coin, I would be fine. But if you do not have rules, then even if you accidentally pick a coin that goes 50x, there is a very real chance you will round trip it, ride it all the way up and all the way back down, and then give it all back on the next opportunity. Others say, I only put in small money, so it does not matter. But treating small money carelessly is exactly how you train yourself to treat big money carelessly later. Every sloppy $100 trade is a rehearsal for a sloppy $10,000 trade. And then there is the most dangerous belief of all. I will learn once I have more capital. No, you will trade the way you train. If you practice being impulsive with $500, you are rehearsing being impulsive with $50,000. The market does not reward the size of your dream. It rewards the quality of your decisions. So let's flip the usual story. Instead of asking, what coin will do X100? Ask, what version of me is showing up to this market? Instead of obsessing over, when will the 2025 bull run start? Ask, if it started tomorrow, would I actually be ready, or would I just repeat last cycle with nicer thumbnails? Here are a few uncomfortable truths that are worth saying out loud. If you cannot follow a plan with $1,000, you will not magically follow it with $100,000. If you are addicted to checking price every 5 minutes, it is not because the market is too volatile. It is because your position size is too big for your nervous system. If your entire thesis is X influencer is bullish, you do not have a thesis. You have a borrowed opinion. The market does not owe us a bull run. It does not care how much we lost in the last crash, how badly we want to come back, or how convinced we are that this time is different. But there is something we can control, starting now. The standard we hold ourselves to before we put a single dollar into the 2025 bull run. We cannot control Bitcoin, whales, regulators, or ETF flows. We can control position size, risk per trade, how much of our total net worth is in crypto, and whether we are following a process or chasing vibes. So the real prep for the 2025 bull run is not a list of all coins. It is an upgrade of identity, from tourist to participant, from gambler to risk manager, from exit liquidity to someone who expects to still have capital when the music stops. In the next part, I will walk you through a simple framework you can use to prepare, whether you are a newbie, an airdrop degan, a part-time trader, or a long-term investor? Let's make this practical. Here is a 5-step framework to prepare for the 2025 crypto bull run so you do not buy the top again. Step 1. Audit yourself and your account before you think about which coin. Ask, how much of your total net worth is in crypto right now? How much could you emotionally afford to lose without it destroying your life or your sleep? What are you holding? For each coin, can you answer in one sentence why you own it? Are you an investor, a trader, or a mix? Which percentage of your portfolio belongs to each bucket? Write it down. Be brutally honest. If you cannot describe your current situation clearly on paper, the market will happily describe it for you later in red numbers. Step 2. Decide your maximum risk before the bull run. Not during it. The time to decide your limits is before price goes crazy. Set a maximum percentage of your total net worth you are willing to put into crypto for this cycle. Maybe that is 5%, maybe 30%. The number is personal, but it needs to be conscious. For active trades, set a maximum risk per position. For example, 1 to 2% of your trading capital. If one trade can wipe out a month of progress, the size is too big. If you use leverage, treat it like a power tool. It is not evil, but it is unforgiving. No all-in, no double or nothing. Size positions so that a sudden wick does not liquidate you. Think of capital as oxygen. When you run out, the game is over. The market will give you more opportunities. It will not give you more oxygen. Step 3. Build a simple research and filter system. DYOR that actually means something. You do not need to become a full-time analyst, but you do need a way to say no. Choose a small set of reliable sources for data and macro context, and mute the rest. For each potential investment, ask, what problem does this project solve? Who is behind it? How does the token actually capture value? Be very suspicious of anything that promises fixed, high returns with low effort, especially during a bull run. Most of the biggest crypto fraud losses come from exactly those too good to be true offers. Your time and attention are limited. Protect them like you protect your money. Step 4. Split your strategy. Instead of going all in on one idea, instead of trying to be a hero with one perfect bet, design separate buckets. A core, longer-term bucket. Larger, more established assets you are willing to hold through volatility. For some people that is BTC, ETH, majors. A tactical trading bucket. Smaller portion of capital used for shorter-term trades, with strict risk rules. A Deegan/experiment bucket. Tiny portion reserved for high-risk plays. Memes, new narratives, airdrops, on-chain experiments. Label the buckets. When you open a position, decide which bucket it belongs to. Do not promote a Deegan play to long-term conviction just because you are stuck in a loss. Step 5. Create a review habit so you actually improve once a week or once a month. Sit down with your future self in mind. Review your biggest wins and biggest losses. For each, write, what did I plan? What did I actually do? What was luck? What was skill? What was emotion? Notice patterns. Are you always increasing size after a big win? Are you ignoring your own stop losses? Are you buying most aggressively when everyone on social media is screaming? The goal is not perfection. The goal is to become slightly less dumb each cycle. If you learn faster than the average participant, you no longer have to be their exit liquidity forever. This is how you prepare for the 2025 bull run in a way that respects reality. Not by trying to predict exact tops and bottoms, but by making sure that when the big move comes, you know who you are, what you are doing, and how much you are willing to risk. Let's zoom out from charts and frameworks for a moment. Money is not just numbers on a screen. It is rent, school fees, parents, children, dreams, and fears. When you lose money in crypto, you are not just losing capital. You are often losing trust in yourself. Maybe you recognize some of this. The knot in your stomach when you open your portfolio and see a sea of red. The way you go quiet in conversations when someone brings up investing. The shame of once bragging about profits, then disappearing when the market turns. The feeling of being alone with decisions nobody around you really understands. Crypto amplifies all of this because it moves fast and it is public. Prices are visible 24/7. P&L screenshots fly around group chats. Social media makes it seem like everyone else is winning while you are the only one who keeps messing it up. But here is the part you rarely hear. You are not the only one who has blown up an account, bought the top, or held a loser too long. In every cycle, millions of people do exactly that. The difference is that most people hide it. They only show the highlight reel. In that sense, crypto is not just a market. It is a compressed life lesson. It tests your ability to delay gratification. It exposes how you handle uncertainty. It reveals whether you take responsibility or just look for someone to blame. If, after watching this, you walk away thinking, "I'm just bad at this, I should never touch it again," that would be a pity. Because the same qualities you need to survive in crypto, patience, risk awareness, self-reflection, are the same qualities that make you more stable in business, in your career, and even in your relationships. The point is not never lose. Everyone loses. Even the best funds, the sharpest traders, the most disciplined investors have red days, red weeks, red months. The point is, can you learn from the loss instead of letting it define you? Can you shrink your ego enough to play small while you are still learning, instead of trying to prove something to strangers on the internet? Can you talk honestly with the people who matter, partner, family, close friends, instead of hiding until you win it back? When you prepare for the 2025 bull run, you are not just preparing a strategy. You are preparing a version of yourself who is more emotionally honest. Maybe that means setting a rule that you will not check price after a certain hour at night, agreeing with your partner on a maximum amount of savings you are allowed to risk, promising yourself that if you blow your rules twice in a row, you will step away for a week. None of this is as sexy as 10x altcoin list. It does not get as many clicks, but it is what separates people who treat crypto like a lottery ticket from people who treat it like a serious, risky, but potentially powerful part of their financial life. Crypto will continue to be wild. There will be new narratives, new memes, new scams, new genuine revolutions. You cannot control that. You can decide who you are when you meet that chaos. So where does this leave us? First, let's be honest. Crypto is not a safe, gentle place. It is volatile, unforgiving, and full of traps. It can make you feel brilliant one week and completely stupid the next. It can pull out parts of your personality you did not know existed: greed, fear, obsession, denial. At the same time, it is one of the few markets where a regular person still has a realistic shot at meaningful upside if they respect the risk and play the long game. You do not need to become a genius trader. You do not need to catch every top and bottom. You just need to understand the game you are playing, risk only what you can truly afford to lose, and stay in the game long enough to let compounding and good decisions work. Preparing for the 2025 crypto bull run is not about predicting the exact date it starts. It is about deciding that, whenever it does fully kick in, you will not be the same person you were last cycle. You will not all in on the first coin you see on TikTok. Confuse borrowed conviction with real understanding. Treat your life savings like roulette chips. Instead, you will know how much of your net worth is in crypto and why. Have clear buckets: long-term, trading, and Deegan, each with their own rules. Respect your stop losses and your sleep more than you respect strangers' opinions. If this video has done its job, it has not just scared you or hyped you up. It has helped you see yourself a little more clearly in the mirror of this market, and given you at least one concrete action you want to take as soon as it ends. Maybe that is writing down your current positions. Maybe it is closing a trade that has been stressing you out for weeks. Maybe it is deciding that your first goal this cycle is not get rich, but do not blow up. If you feel that shift, I want to invite you to do two things. Tell your story. In the comments, share one lesson from your past in crypto, a big loss, a close call, or a mindset change, and what you want to do differently in the 2025 bull run. You have no idea how much your honesty might help someone who is quietly going through the same thing. Stay in the room. Do not just close this video and disappear into the algorithm again. Click on the channel avatar, read the channel description, and if you want tools to trade and manage your digital assets more consciously, check the platform's link there. Use them wisely, understand the fees and the risks in your own country, and never treat them as a shortcut to skip learning. If you found value here, you already know the usual drill. Like, share, subscribe, not because it magically makes you rich, but because it tells the algorithm there is space on this platform for honest, long-term conversations about money and risk. And if you are still hungry for more, stay tuned. In another video, we are going to take one of the biggest blow-ups in recent crypto history and dissect it step by step. Not to laugh at the people who got hurt, but to understand exactly how the trap was built and how you can recognize the next one before you fall into it. The 2025 bull run will create winners and losers, just like every cycle. My hope is simple. The next time the market goes crazy, you are not just watching candles. You are watching yourself, and you are finally playing a game you actually understand.